So this is exactly how you find low float runners early, before they even rip. And I'm going to show you how to do that step by step in this video. We've seen many low float penny stock gappers in the last few weeks, such as YUMA, FRAN, and most recently, VIVE. And what all these penny stocks have in common is the fact that they are all recent reverse split stocks. So that means if you can find these reverse split stocks early and tag a few alerts on them, you'll be ahead of the crowd before everyone else to loan the dip before the rip and make that sweet Lamborghini money. And that's the reverse split strategy that we're gonna talk about today. And no, you didn't have to pay for a $5,000 DVD. You're about to get it for free. Okay, you're right, it's not actually free. All it's costing you is to destroy the like button at the bottom of this video. Go ahead, did you get dumped on by one of the chat room alerts this week? Then destroy that like button. Did your girlfriend or boyfriend or your wife or husband yell at you this week? Then destroy that like button. And then call them back, of course. Seriously though, I should have called him back. If you've seen many of my past videos before, you know I love trading low float stocks. And reverse split stocks are perhaps my favorite to trade. And why is that? Well, that takes us to the first step to the reverse split strategy. And that is to understand why do penny stock companies choose to reverse split. Now, most of us know that 90% of all penny stocks are I think we can all agree with that. The sole purpose for these penny stock companies to become publicly listed is to raise money from the investors. No, they're not actually working on a cure to cancer, and no, they're not working on putting your pets to Mars. Penny stock companies release PR to pump the share prices up and to get investors excited and throwing more cash at them. And when the share prices are propped up, the insiders start selling or to do an offering. Essentially, it's the same thing, diluting the shareholders. Just check all the penny stocks that have popped up in the past before, such as IMRN, Cool, and YUMA. It's all the same thing, pop and dilute and drop. So in order for these penny stocks to keep raising money, they have to stay listed on the Nasdaq, right? To stay attractive to future investors. And there are many funds out there that are not allowed to invest in OTC stocks. So they can only invest in stocks that are listed on the Nasdaq. So that's the first reason these penny stock companies will try very hard to stay listed on the Nasdaq. And one of the minimum requirements to stay listed is to keep a $1 bid. So one of the stocks that I have found that are going to do a reverse split is now trading at 25 cents on the Nasdaq. And they have received a delisting notice from the exchange. So that means this penny stock have to somehow get their prices up to a $1 bid within the next 90 days. So to do that, they are going to do a reverse split. Don't worry, I'll tell you what this ticker is and how I found it and many other reverse split stocks in a little bit, I promise. So for example, when a stock such as YUMA files for a 1-for-15 reverse split a couple of months ago, the stock was trading around only 20 cents and they have a float of around 25 million shares outstanding. So that means after the 1-for-15 reverse split, YUMA will be trading around 340s with a float of only 1.5 million. So that makes YUMA now a low float stock. And that brings us to the second reason why these penny stocks choose to reverse split. And that is so you can smash the like button if you haven't done it already. Seriously though, doing research and planning this video takes me an entire day. So if you wouldn't mind tapping that like button, I'd really appreciate it. And it's the easiest way for you to support this channel. So let's go back to penny stocks. The second reason these penny stock companies choose to reverse split is so they can tighten up their share float. That will make it easier for them to pump the share prices up when they conveniently drop a PR after the reverse split. Because the float of a stock is the amount of shares outstanding available to be publicly traded. And when a float is so low, such as 1 million, that means it's very easy to move the stock. And that's why we've seen low float runners such as BPTH going from $2 to $60 within 2 or 3 days. There was just so much demand for the stock and not enough people selling. fresh buyers are willing to bid it up to $60. They want their share prices to be easier to be bid up for the insiders to sell and do an at-the-market offering. Because, just like I mentioned in the beginning, these companies become listed in order to move investors' money to their own pocket. Legally, of course. And that's really the name of the game with these small cap penny stocks. And as day traders, we must understand how this game is played and game the system to our own advantage. So understanding why reverse splits matter is the first part. The second part is how to find reverse splits penny stocks early. Benzinga Pro is a new scanner that I've been using for more than a year now. You can see that I have many different tabs on the top for different purposes, such as earnings, gappers, small cap movers, and I have right here reverse split screener. So what I have in the reverse split screener is basically the news search. It automatically updates me every day on Nasdaq listed small cap stocks that have the brand new PR headline with a keyword reverse split. Or sometimes I'll use delisting and like offering. So you can see by searching those keywords is how I found these stocks over here from just doing the keyword search. And it's this way that I found out about VIVE, the stock that gapped up from $4 overnight to a high of $5.60 pre-market on October 1st, and it spiked to a high of 640s at the open before selling off. But I already knew this stock could potentially run almost 2 weeks before the PR headline, and that's because I got this headline from Benzinga Pro. VIVE reports approval of reverse split for 1/100 split. Right here. This is the headline that I got. And once I found this headline, I put it into the watch list over here and I ring this notification bell right here, which you should also do for this YouTube channel so you never miss another Lamborghini Money video from the Humble Trader. So it's by clicking this bell icon that I can be alerted whenever there's new headlines, and I receive email alerts for press release and SEC filings, and I get email summaries every single day. This is how you do all your reverse split research early before anyone else. Seriously guys, the money in day trading is all in the planning and the preparation you do outside of market hours. It's not by following chat room alerts to buy at $6 and sell at $6.30.
Really? You're telling me by following your chat room alerts and screen share that's delayed 2 or 3 seconds, I can make millions of dollars trading from anywhere in the world? On the beach, in a Lambo, or taking a dump on the toilet? All that for just doing 1 or 2 hours of work a day? And after I buy your $5,000 DVD? Wow, what a steal!
Like, literally. In all seriousness, guys, there was a chat room that was leading thousands of their members to buy the dip at $6 on VIVE and to potentially sell at 630s. The guy sold most of his position at 623s and cut his losses after this rug pull from $6. You think all the thousands of the followers that was following him were fast enough to cut the losses at 590s? I don't think so. Now, if you're tired of following chatroom alerts and not learning anything from them, stay till the end of this video. I have a small and special announcement that might interest you. So that's the power of using Benzinga Pro and doing your research early on these reverse splits before anyone else. So while people are just checking the scanners and drinking the Kool-Aid on this VIVE PR, I already knew what's likely to happen. Thanks to the alerts I had from Benzinga Pro, I knew about the SEC Form 3 and Form 4 that was filed few days before the actual pump. In the filings, you can see that Goldman Sachs started acquiring some common shares after the stock finished reverse split on September 18th. Now, was it really a coincidence that an investment bank is acquiring some trashy penny stock companies? I don't think so, and it would be foolish to be thinking that Goldman Sachs actually want to invest long term in this company. They are there to help the stock raise more capital. They're gonna be selling as well. And of course, I did more SEC filings digging on VIVE. That's how I found out the stock filed an S1 to register to do an offering in early September. They are planning to raise another $8 million. Now, this S1 doesn't have an effect on it, so they can't use it yet. But the key in reading the filings is to know that this company is and they need to raise more money. If you want to learn more about reading SEC filings for penny stocks, check out these 2 other videos. And all this research and planning I had done beforehand is telling me that VIVE is going to release a PR soon to pump the share prices up. And it will be very easy for them to do so because after the 1-for-100 reverse split, the stock only has about 400,000 shares float. So that makes VIVE a micro float. And I want to long the dip pre-market and ride the squeeze up and get out before Goldman Sachs or any other dilution show up at the party. So really early on October 1st, the stock gapped up overnight due to the PR about Goldman Sachs investment and the fact that the company finished the ATM offering for $6.7 million. And the entire internet is going gaga over this. Oh, Goldman Sachs is investing in this company, I should too. For the people who have done the research early, they know that this company, VIVE, is in the hole for $175 million of debt. And they burn through $8 million every 3 months. So that's $6.7 million. It's not going to last. Remember, they already filed an S1 to do even more offering coming up. So this downtrend on the daily charts due to dilution and the bag holder story remains the same for the stock. So now let's talk about how to trade and profit from these reverse split penny stocks. First of all, like I've said many times before, there's plenty of money to be made by waking up early. Right when I get an alert from Benzinga at 7 or 8 market time, I know exactly how to execute and what my support and resistance levels are for the stock. Longing the dip on these pre-market movers is a very reliable strategy as long as you have above average trading volume. And if you long pre-market, you can either get out of all your position near highs or hold on to a small piece to sell at a potential market open spike. Not every low float stock will run at the market open. We've seen many examples in the past before with reverse split stocks such as SPI and SINT just get dumped at the market open in a seller's market. But stocks like FRAN and BPTH will squeeze a lot higher before even dipping down in a buyer's market. All the major pullbacks are bought up and the stock even provide the lone traders many opportunities for multiple days. Just because a penny stock is a low float reverse split doesn't mean we'll go straight to the moon and make it rain Lamborghinis. So it's up for you to manage your own risk and your own positions according to the current market conditions. If you want to learn more about how to adapt your trading to fit various market conditions, make sure to check out this video. So as you've seen earlier on my Benzinga screen, there are a few more reverse split stocks that I've been tracking. And they are ONVE, FVE, NNVC, TTPH, IFMK, and AEMD. So I'm giving you the tickers now. It's up for you to do your own due diligence and track their PR and SEC filings using Benzinga Pro. And no, please don't be that person who just buy everything I mentioned blindly without doing your own research. I'm not licensed, I'm not a guru, I'm not a financial advisor, and I don't even have
a Lamborghini.
So clearly, I have no clue what I'm talking about. And yes, I get it. Benzinga Pro is quite expensive. It's about $115 a month. But really, it's a business expense that can make you more than what you pay for every single month. It has so many useful features that I use every single day, such as the Squawk audio news alerts, and also earnings and other research. In trading, knowing the news seconds before everyone else will help you so much tremendously. That's how I found out about the spike on OBLN and PDSB before everyone else on Thursday morning. You can try out Benzinga for free for 14 days with the link below. I highly recommend it. It's a tool that I personally use every single day. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next week.